Hey folks, welcome to Wednesday, the 10th of November 2021. And what we have seen really over, yesterday's trade, we were really on it yesterday in the Dow. We saw essentially briefly after the market opened, Tesla just started to come off really hard, down. Really, I think we caught the occurrence when the trade was down about 4%. And then within seconds it had just shunted down to be negative about 10% on the day, and that was really proving quite a lot of weight for the US equities picture. And indeed we did come off quite hard with that occurrence. I'll switch over to the charts right now. I mean, in the overnight, nothing really too interesting. We did have a drawdown of about 2.45 million on API in the US. So we've had a gap up open on WTI. That gap is closed, and we've been pulling back really since on US oil. So playing that on the short side. So let's get over and have a look at these charts here. You can see really highlighted on the NASDAQ chart here yesterday. The market had, in the European session, bid up to the 16,376, as that was a high of the 4th of November last Thursday. Quite a nice little area. And then once we got that market open, just, Tesla providing that really heavy downside. So let me see if I can load up my charts here to show you what happened on Tesla. But, nice move for sure on the NASDAQ. So kind of from the bid up to down on that single move is about 1.23% down. And then into the close, putting on a negative 1.41% on the Nasdaq. Just loading up further stuff here on Tesla. You can see that really across the board. Nasdaq was very fast action to try and get on. The risk reward there. I mean, it pushed over the level. Let me just get this here. Pushed over the level by about 67 ticks above the 376 there. Yeah. Tesla, we look at this on the 1 minute. It's freezing for me right now. Oh yeah, we've got to maximize sell, and look at that here. So see that drop yesterday on Tesla. Really kicked off on the bell on the market open, and then just crushing down. Nice little target, the 1052 spot 61s here. You can see the market came down, putting a lot of excess below that price, but generally finding a bounce from there to come back up 5%. But then closing in around the 9 o'clock marker there, down quite a bit on the day. So I think it was 11% down, if I'm not mistaken. Actually, it's 14%. 14% thereabouts down on the session. So, but I was a little bit interested by the fact that that single stock had just dragged the Nasdaq and US equities down so much. But then again, it's 2.6% weighting on the SPOOs. So therefore, it has to have some material impact, and this is what it was. So not too many of the elite team trading SPOOs. Really, it was looking at the Dow on the shorts here. I think it was here on this pullback here into this high. I think actually the elite team really just got to work on a break here of the prior area, 36,261 or thereabouts, and just writing that thing right down and then getting flat for the 4 o'clock marker. Lovely trade there from the guys for today. I think the start market does want to get back to 35,971s, which was the high of the Tuesday, the 2nd of November. We also have the looming 20-day exponential moving average at 35,670s. So I'm actually quite happy to just let this thing pull back and only get involved when we have a really nice setup for the shorts or indeed the longs. I was saying yesterday at the very start of the day that equities were looking a bit peakish, sitting, I think it was at this point here, 8 o'clock. Yeah, it was at this point here. It was looking quite peakish, say, for on the SPOOs. Sorry, I'll just get this up on the screen here. And then, of course, you had that 8 o'clock open and, pushed up, but retracing most of that. So, you know, really, these equities, I was talking with one of the members yesterday on the team. These equities are getting pretty tricky into these all-time highs. It just feels like the last couple of highs we've had have just been very difficult trades to get on with a clear risk reward from a sensible area. So as these markets do push into these all-time highs, it doesn't mean that everyone riding into those highs is long, that intraday long from a beautiful position. I mean, I think generally, this is the swing traders just making money and liquidating into those new all-time highs. Cable escaping from the lows of 35.10s this week so far, or sorry, the lows of the 34.12s from last week, and doing quite a decent job of a retracement. We did actually get this breakdown on the morning trend break here. So this is the morning trend. You did get a breakdown, a very low quality breakdown initially, and then a really high quality breakdown. And of course, then we had the pullback. So you could be shorting this in on trend, riding that down to get paid out 35.33s, which was a nice little area that we were looking at. But ultimately, I don't like trading cable. I don't think it's really that liquid. It's not really my bag to trade anything that's not super liquid. So gold as well. Yeah. Look, I talked about this yesterday. Nice little area on the APAC low, 1821 to be buying to push up, but really, T-notes had found support in here. Show you this at the bottom of this sort of, this line in the sand area, and took a bid yesterday. Well, that was fine. It took an initial bid, pulled back, and kept pushing on into kind of the late session on the day at 4, 5, 6 o'clock. But really, that real yield inverse correlation, not really letting gold go. So, I mean, I still think bonds do have further upside. I think we're going to see definitely bigger new highs on the week for T-notes, and that will drag gold with it. But you can see the trade on gold and trying to pick an area to get long. You really need to be waiting for data. And so, of course, we have today data CPI out of the US at 1:30. So, really best to wait to trade any of these US equities or gold until then, and especially euro dollar. So, oil, we're going to have DOE today, 3:30. We have pulled back to this gap area yesterday. Refer to the pre-US yesterday. I said the business was unfinished on this gap here. You can see it just did not close the gap just right there. So yesterday we did bid back up to the bottom of the range, took a little bit of an offer, but generally persistent buying, and we pushed up, of course, pre-API into the highs, and then gap up, reopen on that drawdown on the APIs. So where have we put in a low? Well, it's the top of that gap, 83.51s. I think I want to get this area resolved before I get back on the long. So I have been shorting this on the APAC breakdown this morning. Quite a nice little bit of risk reward on this one. Show you that here, sort of risking here, shorting here, and down to here, you're on about 8.7 to 1. That's a nice little trade. And sure enough, the market was just like pretty weak looking. I mean, API is done and dusted, like well done and dusted by this time. So, let's see what we can get at a DOE. My suspicion is it will confirm that the API drawdown is true, and that we're in the magnitude of about 2 to 3 million drawdown. All right, that's it for me for today. Going to be on again now at 1 o'clock, and we'll run then into the CPI data out of the US. Is it PPI? CPI or PPI data, core PPI and PPI. Headline figure expected to come out 0.6% in line with the prior and above. Or sorry, no, hold on. Sorry. I'm looking at yesterday's. Um, So we have PPI today. Or sorry, CPI today. CPI today. I'm getting all confused here. Core CPI set to come out half one, 0.4% above the prior 0.2%. And then we're also going to get the initial jobless claims, 265,000 below the prior 269. All right. Have a good one, and I'll talk to you later. Cheers.